Here are the crypto top headlines covered in this video. Did XRP price just bottom against Bitcoin? Next, Bitcoin as strong as ever with record high 200-day moving average. Also, crypto must adapt to laws, not the other way around, says John Reed Stark. Welcome to Crypto Top Headlines, where there's no clickbait thumbnails or titles, and no speeches on my opinions, just bringing crypto's news to you. We have a quick request that doesn't cost you anything in order to help. Help us grow this channel to 1,000 subscribers by September, which would be our channel's 1-year anniversary. All we ask is that you click on the like and subscribe buttons, as well as the notification bell. By clicking on these, it does help grow the channel, so thank you in advance for doing so. Now, on to these headlines. Our first top headline: did XRP price just bottom against Bitcoin? XRP price fell over 14% year to date, pressured by Ripple's ongoing legal battle with the SEC, so a bounce is in order, analyst suggests. The price of XRP in Bitcoin terms sunk to a 3-year low this week, suggesting a potential local bottom and buying opportunity for XRP. XRP to BTC price ratio sinks to 2021 low. XRP's price compared to Bitcoin fell to a 3-year low last seen at the beginning of April 2021, according to TradingView data. On the monthly chart, this chart pattern could be interpreted as a strong signal of a XRP to BTC bottom, according to Tony Severino, the founder of CoinChartist, who wrote in a May 6th X post, "Great spot. He's right. XRP to BTC just flashed a bullseye bottom signal." Despite the optimistic chart formation, XRP to USD has been in a downtrend since the beginning of 2024. XRP price fell over 14% year to date to the current 53-cent mark, while BTC to USD rose over 43%. XRP's crab walk can largely be attributed to Ripple's ongoing lawsuit with the U.S. Securities and Exchange Commission, according to Iva Wisher, COO and co-founder of Prom and previous chief analyst at 3 Commas. Wisher told Cointelegraph, XRP's price movement is tied to the uncertainty generated by its legal battle with the SEC. Such obstacles naturally lead to cautious investor sentiment and reduced trading activity. The SEC sued Ripple back in 2020, accusing them of illegal raising of $1.3 billion through an alleged unregistered securities offering by selling XRP. In the latest development, XRP contested the SEC's request to impose a $2 billion fine against the blockchain company, saying the penalty should not exceed $10 million. Is the XRP local bottom in? Despite XRP's subdued price action, it could rise to a new all-time high by July, according to pseudonymous crypto analyst Charting Guy, who wrote in a May 6th X post, "Fractal projected target is 0.00006486. With today's BTC price, that puts us at a roughly $4.09 XRP. As I've been saying forever, new all-time high by July. Now say BTC is at $85,000 to $100,000 at that time, like I think it'll be. Then we're talking a $5.51 to $6.48 XRP. On the daily chart, XRP's Relative Strength Index, or RSI, indicator stood at 50, suggesting that XRP's price is currently neutral or at fair value, up from the 28 low on April 13th when XRP price was oversold. The RSI is a popular momentum indicator used to measure whether an asset is oversold or overbought based on the magnitude of recent price changes. However, XRP price has been in a downtrend for over 3 years. On the weekly chart, XRP has been printing lower highs since April 2021. If this trend persists, charts suggest that the XRP price could fall back to the 31-cent level, which was a significant support area through 2022 and 2023. Let me pause here for a moment. If you're getting value out of this video, please click on the like and subscribe buttons as well as the notification bell. Our next top headline, Bitcoin as strong as ever with record high 200-day moving average. The long-term Bitcoin trend indicators, the 200-day and the 200-week moving averages, are at the highest ever levels, with Anthony Pompliano saying that BTC is as strong as ever. The Bitcoin 200-day moving average is at an all-time high of $50,178, a key technical indicator for predicting long-term Bitcoin price trends, suggesting a bullish long-term outlook. The indicator hit its peak on May 6th, according to Buy Bitcoin Worldwide. It comes as Bitcoin recovers from a post-halving price dip that saw it drop as low as $56,800 after the network's block rewards were halved to 3.125 BTC on April 20th. The 200-day Simple Moving Average, or SMA, sums the last 200 days of Bitcoin's closing price and divides it by 200 to iron out short-term price fluctuations, aiming to show traders and analysts a long-term trend indicator. When BTC prices are trading above this indicator, as it is now, it typically suggests that the long-term trend is bullish, whereas the opposite is the case when prices drop below the 200-day moving average. Speaking on CNBC's Squawk Box on May 6th, Bitcoiner Anthony Pompliano commented on the 200-day moving average crossing $50,000 for the first time. Over the long run, Bitcoin continues to trend upward, even though on a day-to-day basis the price is volatile. Don't get lulled to sleep by Bitcoin going sideways. The long-term thesis is as strong as ever, he added in an X post. According to the analyst Willy Woo's Woo Charts price models, the 200-week moving average, a much longer-term trend indicator, is also at an all-time high of just over $34,000, meaning that the yearly trend outlook is even more bullish. The price of Bitcoin crossed the 200-week moving average level in mid-October and has been above it ever since. Spot prices are also significantly higher than the realized price, or RP, indicator, which is around $29,000. The RP is a measure of the value of all Bitcoin at the price they were last transacted on-chain, divided by the number of BTC in circulation, and another long-term trend indicator. However, the shorter-term 50-day moving average has dipped a little from its peak in mid-April as BTC dropped from its mid-March all-time high. Pompliano also mentioned that the Grayscale Spot Bitcoin Exchange Traded Fund, or ETF, posted its first inflows on May 3rd. The fund saw an inflow of $63 million after seeing net outflows of more than $17.5 billion since it was converted from a trust to a spot ETF in mid-January. The momentum has continued. On April 6th, the fund also posted an inflow, albeit a smaller one at $3.9 million, according to preliminary data from Farside Investors. Our next top headline, Crypto must adapt to laws, not the other way around, says John Reed Stark. Former SEC official John Reed Stark has criticized claims that the agency is regulating by enforcement in a hearing before U.S. Congress. John Reed Stark, a former Securities and Exchange Commission official, has accused the crypto industry of perpetuating myths to obscure its lack of transparency and accountability, dismissing claims that the agency engages in regulation by enforcement. Stark's comments were made at a U.S. House Financial Services Committee hearing on May 7th. According to the SEC's former Internet Enforcement Chief, the crypto industry refused to conform to establish laws while expecting the legal framework to bend to its needs. The catchphrase of SEC regulation by enforcement falls squarely into the last category. Just plain false. Crypto promoters represent the most important recent example of industry players accusing the SEC of unfairly policing the markets. I've never witnessed such a well-funded, coordinated, and unfounded assault on the SEC and its mission. According to Stark, what has been called regulation by enforcement within the crypto industry is just the regulator performing its duties. The rest of us simply call it enforcing the law. Digital assets typically have no cash flow, no yield, no employees, no management, no balance sheet, no product, no service, no history of operations, no earnings reports, no proven track record of adoption or reliance. How can any financial analyst, let alone any everyday investor, conduct a proper valuation amid such boundless data vacuum? Stark questioned during the session. Within the crypto industry, the term regulation by enforcement is often used to criticize how the SEC has been enforcing rules and regulations. The industry argues that rather than developing clear, formal regulations through formal legislation or rulemaking process, the SEC is establishing regulatory precedents through enforcement actions. Don't get me wrong, the SEC is far from perfect. There are SEC cases and SEC rules that I believe are unfair. The SEC has not gone rogue, but is simply just doing its job. The digital asset industry needs to get its act together and adapt to the laws that apply to it, not the other way around. The hearing focused on examining and improving the Commission's enforcement practices, with heavy criticism directed at the agency's approach and the effects it had on businesses and individuals. During the hearing, Nick Morgan, founder of the Investor Choice Advocates Network, accused the SEC of producing piecemeal litigation on a case-by-case basis in reference to cases in which the Commission is free to ignore adverse rulings in some jurisdictions to seek more favorable results in other jurisdictions. Morgan continued, among many problems, the SEC's regulation by enforcement policy causes legal uncertainty for ordinary people, including people not accused of fraud who were forced to litigate policy matters on a case-by-case basis, even when a federal appellate court rules against the SEC on a particular policy. So this concludes Crypto Top Headlines. If you haven't already done so, don't forget to click on the like and subscribe buttons as well as the notification bell. Also, leave your thoughts in the comments and share this video with your friends and family. Thank you all for watching Crypto Top Headlines, bringing crypto's news to you.